Well, the market shows resilience in the face of U.S. recession fears sparked by Fed Chair Jerome Powell's remarks. The Nifty and the Sensex trade with a quarter-point cut. The mid-cap index trades flat. Select metal and auto stocks see buying, while banks face pressure.
U.S. Fed Chief Jerome Powell says the central bank may need to undertake more rate hikes than previously envisaged. Adds that the pace of rate hikes may also be quicker than anticipated. The U.S. two-year surges to a 15-year high. On the remarks, Asian equity markets fall. The dollar charges ahead, pushing gold and crude lower.
Adani Group promoters release pledged shares worth 7,374 crores from various international banks and Indian institutions. Adani Ports sees the highest amount of pledge release at 11.8%, followed by Adani Transmission at 4.5%. Adani Enterprises and Green also see a reduction in promoter pledges.
CNBC-TV18 exclusive sources tell us RBI is likely to extend the IndusInd Bank CEO's term by 3 years. The central bank is said to have found Kathpalia's performance satisfactory and is therefore likely to favour management stability at the bank.
And the Citi deal was a great opportunity to add an affluent franchise to Axis Bank, says CEO Amitabh Chaudhry. He tells CNBC-TV18 that the deal's valuations were competitive and that he sees huge synergy benefits going forward. Adds that the bank is not looking to raise capital as of now.
You're watching us here on Halftime Report, the halfway mark at today's trading session. The market is doing just market things following global cues. Opened lower, thereafter saw a bit of recovery, and that recovery was sold into, currently closer to the lower end of today's trading range on the Nifty as well as the Sensex. The mid-cap index and the Nifty Bank mild outperformers. I'm Manglam Malu, a happy minority partner of Halftime Report. We have wonderful women with us, Ekta as well as Sonia, but these are only people in front of the camera. In the production room, we have a bunch of them, our producers, directors, the people who fix guests, and a bunch of our staff. So thank you.
I think 80% of our team, right, in CNBC-TV18 must be women. 80 if not more.
Yeah.
So happy Women's Day to everyone. Happy Women's Day to you, Ekta. And it's, I guess, as if the cliche goes, every day is Women's Day. But I'm so glad that, we are having all of these conversations around so many challenges that women face day in and day out. Hopefully, the conversations are starting on crucial issues that were not spoken about during our mother's time. And I'm glad that, these discussions are going on.
Absolutely. And, I'm proud to say that I work for an organization which is spearheading a lot of change when it comes to women. I think the kind of diversity that we have, the flexibility that we have, I think is something that CNBC-TV18 has really helped in empowering us. But I'm not trying to score brownie points here. It is definitely the truth.
You spoke about leadership and women opportunities, etc. Outside the world, in the workforce, you have more women at the start of the finish line. And then as you progress, the leadership, the number of women reduce. In CNBC-TV18, you have more men at the start line. And as you progress the leadership, there is a fair amount of women. And we haven't done badly. I mean, 21 years of dominance. So yes, women can lead and we've shown the way.
And, I hope all these issues like sort of gender parity, gender pay gap, I mean, India is really low as far as gender parity is concerned. So hopefully, things, there's a lot of work to be done. But happy Women's Day to everyone who's watching. And of course, lots happening in the market as well. So let's get straight to that. I think the first company that we have on our radar is Route Mobile. The management in its last interview told us that January was a very strong quarter for them. To discuss how the company's performance has been in February so far, we have David Weiger, who is the Executive Vice President Digital at Route Mobile, who's joining in. David, thanks a lot for joining in on the show. I want to start by asking you about your performance in February so far. How has it been? And would you like to change your guidance in any way, your FY23 guidance that you had put out?
Hi, thanks for having me on. In terms of the performance in February, I'm going to leave that to the corporate team to provide guidance to the market. My focus here is on our identity services.
Go ahead. So, in terms of identity services, what have you seen in terms of a movement? How are the trends like on the ground, and what is the prognosis for the next 1 year?
Sure. We've seen in the last 2 to 3 years in particular, there's been a huge migration from consumers to how they interact and transact with businesses, moving further and further online, and particularly are transacting and interacting on mobile web. With that comes a huge number of challenges for businesses, really to understand am I talking to the person that I think I'm talking to? Am I talking to David? Or has David been the victim of some kind of fraud? Is this an imposter? Or very simply, is this a bot? And we've created a new business unit, a new company, TrueSense, within the Root Mobile Group, which is formed to help solve those challenges for enterprise.
Okay. Can you give us a few numbers when it comes to TrueSense? Because that is expected to be the next big platform which is launched by Root Mobile. In terms of what you all are targeting when it comes to numbers going into FY24, say on the revenue as well as the EBITDA and profitability?
Right now, we're really focused on getting the products launched in India, and those are going to be coming through in the first quarter of the next financial year. Again, we'll start providing some guidance on what that means in terms of numbers for the financial year 2024 in due course, and the team will share that very soon.
So what might the investments though be? I'm sure there will be some amount of capital investments which will go into building up the platform. What is outlined right now, and how exactly would it be funded?
So we're funding it from the existing business. The Root Mobile has had a very good year, as Rajdeep has spoken to in the past couple of months. So we're funding the growth of TrueSense, the investment in the platform and the team from the existing business.
I understand that you won't be able to run the numbers for your company, etc. Just wanted to understand what the size of the opportunity for a service like this would be, and the kind of market share that you guys could potentially target in a few years from now.
Yeah, the opportunity is enormous, and the opportunity is not just in India. Obviously, India is a very important market to us, and that's where we're going to be focusing our efforts first. But the global opportunity is huge. We look at you look at numbers such as SIM swap fraud. One of the challenges we're looking to help consumers avoid the impact from, and obviously enterprise avoid the impact from. That's cost more than $10 million in the UK market in the last 5 years. That's just one of the many challenges that we're trying to solve. So really, the opportunity is enormous. And in terms of the share, we have a great first mover advantage, particularly in India and in other emerging markets. We've built great technology within the group over the last couple of years, and now we're going to take that out to more markets, to more customers. And I'm very confident that we've got a good run to really be a leader in this space.
As you said yourself, right, you're trying to secure digital transactions through a reliable ecosystem, and that's what you're trying to do with TrueSense. Anything else in this space that you plan to do in the near future, either in terms of acquisitions or launching some more new platforms to strengthen this entire vertical?
I think it's too early to talk about acquisitions. Right now, we're going to launch what we're building. And what we're building really falls into two categories. It's around trust. So if I'm providing my unique identifier, my data to an e-commerce site or a bank or a consumer application, helping that enterprise understand, is that David, as I said earlier. And then the second piece is verifying that data. So looking at, if I'm providing a phone number, how do I verify that David is still in control of that phone number? Those are the areas that we're looking at. And that's going to be the focus for our product development. And those are the products we're going to be looking to launch to the market.
Okay. David, just a quick word on the competition, because you did say that you have a first mover advantage when it comes to India as well as emerging markets. So can you just outline what exactly the competitive scenario looks like at this point? How many other companies are you competing with in the same space? And hence, what might your market share be?
Sure. So there are other companies that are starting to look at this space, and including in India and some of the emerging markets we're looking at. I think the differentiator with TrueSense is one is that we are looking at this from a multinational perspective. A number of the companies in this space are purely focused on the Indian market, and whilst that's great for a number of Indian businesses. A lot of consumer applications in particular, a lot of e-commerce sites are increasingly starting or moving to multinational, and they'll need support for these services across borders. In terms of what market share we're targeting, we're going to ship our products and we'll see how we get on. We're very confident that we'll be a leader in this space.
As a part of the overall company's revenue, how big do you think TruSense can be in the next couple of years? And while you are investing in this, while you're investing in this, what will the profitability metrics of this look like? Because, I mean, in the initial years, of course, it would be lower than the overall company's average. And by when does it come back to the company's average?
Sure. So in terms of looking 2 to 5 years out, we believe we can be a significant portion of the company's revenue. With these identity services, we're targeting these as being a higher margin business than we have today. That's obviously going to take a little bit of time as we focus some of our spend on investing, on building the platform, building the team out. But ultimately, we're looking at these as higher margin products.
All right, we leave it at that. Thanks a lot for joining in, David. All the best with the move and the launch of the platform. That's Route Mobile. By the way, for the market as well, not too much happening. The Nifty just consolidating around that 17,660 mark, still down just about 50 odd points. We'll take a quick break. On the other side of the break, we will talk about stocks that are gaining in trade on the back of news updates coming up in just a bit.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, it's turning out to be a good session, so it seems as though we've definitely shrugged off what's taken place globally at this point in time on the fears of a possible further rate hiking from the US. So currently the Nifty is up around 69 odd points. We have the mid-cap index, which is outperforming with a gain of around 0.8%. But let's talk about one particular set of stocks which have been gaining in the past couple of trading sessions, Adani Group. Now, the latest news is that they've prepaid around 7,374 crores of share-backed financing, which is ahead of the maturity in April of 2025. Vivek, who's been following all of these stories in the past couple of weeks, is here with the latest details. Vivek.
Well, absolutely right. So what's actually happened is that one of the biggest fears that market participants had as far as the entire group was concerned was the proportion of the pledged shareholding as far as the promoter group holding within each individual stock was concerned. So now, along with the fundraise, the other thing that the companies have been doing has been, continuously prepaying all of the pledged shares so that all of the share-backed financing of the group stocks have fallen quite significantly. So now, looking at the news flow itself, they've gone ahead and prepaid a little over 7,370 crore ahead of the maturity in April 2025. And this payment has been made to various international banks as well as Indian financial institutions. So because of that, what actually happens is that the company shares will be released that were earlier pledged to the various financial institutions. So Adani Ports, almost 11.8% of the promoters' holding will be released. Adani Enterprises, it's 4%. Adani Transmission, 4.5%. And Adani Green, 1.2%. Now, in February as well as March of 2023, what's actually happened is that the group has managed to repay over $2,000 million of share-backed financing. And very importantly, what the management has further guided to is the fact that they will prepay all of the share-backed financing before 31st of March 2023. So this is going to be a very important trigger to keep an eye out for as far as the entire group is concerned.
All right, Vivek, thanks a lot for that. So that's the Adani Group. The up move continues from last week itself, a big mover in this month after a big decline, of course, that we saw on those stocks. Krishna Diagnostics is the other one, up almost in double digits today. Ekta, what's driving this stock?
Well, the news is that they've operationalized 100 pathology centers, which is as per a part of a BMC contract, which they had won earlier this year, which is in Jan 2023. Now, the company had won the tender, which is to basically provide lab investigation facilities for BMC dispensaries and hospitals in Mumbai on a public-private partnership basis. Now, as per the contract, the company has set up approximately around 600 collection centers across Bombay. That is the eventual plan, to set up 600 collection centers. So they've operationalized 100 pathology centers as of now. And these 600 centers will eventually carry out 139 routine as well as special pathology tests. So that's the reason why you're seeing the stock up around 10% because they've executed a part of the contract that they won from BMC in January this year. As you can see, the stock is handsomely higher today, up around 10% at this point.
Okay, that's Krishna Diagnostics. But moving on, sources have told CNBC-TV18 that Cholamandalam may take over Aptus Value Housing. Interesting story coming in there from my colleague Abhishek. He's joining in with all the details. Abhishek, over to you.
Well, Sonia, sources do tell CNBC-TV18 that Chola may eye an arrangement offering management control of Aptus Value Housing. So, Aptus promoter and MD, Mr. Anandan, has not been able to identify a successor in the family to run the business after him. So, Anandan is an ex-employee of Chola and is likely to favor such a deal. The integration or the process by which, Chola runs or, Aptus Value Housing runs, both are one and the same. So, the integration process would be really smooth. PE promoters own around 37% in Aptus, so an exit at some point is likely. Chola seems to be keen on entering housing segment, and Aptus is a good fit regarding the same. Just to give some maths, the gross NP ratio of Aptus is around 1.44%, while Chola is at 5.4%. The ROA at about 8.5% and ROE of 16%. One of the best return ratios that you are seeing in the HFC industry, and is much better than what Cholamandalam's ROA is. So CRAR, that is capital adequacy ratio, is more than 79%, robustly capitalized. So all the financial metrics do make it a potential candidate for Chola as well in terms of integration being on the positive side. So we have reached out to Cholamandalam, who have responded that as a policy, Chola does not comment on market speculation. We also tried reaching out to Aptus Value Housing. However, we are still awaiting a response from them. Back to you.
Okay. All right, Abhishek. Thanks very much for that. Well, we need to take a short break now, but up next, Technical's Aditya Agarwal will be joining in to tell us what he's strategizing this Wednesday. Stay tuned.
Welcome back. The Nifty is still holding around that 17,650 mark. Perfect time actually to get you some of the FNO action at midday. As we speak, both the Nifty as well as the Nifty Bank are below key levels. Let's talk about the Nifty itself. It found some resistance on Monday at the 50-day moving average of 17,850 thereabouts, and thereafter took some support at the 20-day moving average. But this morning or this noon, it is below both those levels. So any sort of formidable recovery comes only after the 17,701 mark is crossed significantly, and an attempt towards 17,855 is made as well. The Nifty Bank was the one that led this decline from the 50-day moving average. The Nifty Bank's Monday high was just at the 50-day moving average, 41,674 thereabouts. So that is something that we'll have to watch out for as well, as the Nifty Bank is currently outperforming. In terms of options which are written right now, the 17,700 put, 17,600 put, as well as the 17,650 puts are both extremely active, telling you that bulls believe that 17,500 to 17,600 is where they do see a fair amount of support. But tomorrow is the weekly options expiry, and weekly options expiry is usually, more about the range in which the index trades, as a result of which people write both calls and puts. And the most active right now is 17,700 call as well as the 17,700 put. So the 17,700 put has a premium of what, 80 odd rupees, and the 17,700 call comes up for you. That has a premium of around 30 rupees. Together, ex-brokerage, etc., those who are writing this straddle, which is a call and a put together, would pocket about 100 odd rupees. So they would be playing for a broader range of 17,600 at the lower end on the Nifty to 17,800 at the upper end. So that's how the FNO setup is.
Okay, well, Aditya Agarwal of InvestFed joins us now to talk more about the way forward. Aditya, thanks for joining in. Do you see the market move above this range of around 17,000 to 18,000? Is there any trigger that suggests that, we could break out of this range? And what are the levels that you're watching out for? What are the individual stocks to look at today?
Hi Sonia, good afternoon, thanks for coming to the show. There is a bit of a consolidation that is going on at the moment after a bit of a volatility that we had seen the previous month. March has started off on a cautious note, I would say, and there's a bit of a consolidation that is going on. I wouldn't read too much in the correction that we are seeing today. On the downside, 17,600, 17,550 is a good support area. So if Nifty falls down to those support areas, I would be a buyer rather than a seller in this market with a good stop loss at 17,500 or just below that. And I'm looking for a northward movement at least to levels of 17,800, and that is taken out. 18,000 cannot be ruled out as well. So overall, I believe there is a good, decent upside in the market. Risk to reward is in favor of going long. And especially looking at the bank Nifty, the way it is outperforming today, I believe 42,000 is around the corner on the Bank Nifty. So clearly Nifty and Bank Nifty both should outperform, and today's correction should provide an opportunity, and if this extends, could be a good buying opportunity for both Nifty and Bank Nifty.
Okay, so Aditya, quite optimistic both on the Nifty, where 18,000 can't be ruled out and 42,000 can't be ruled out for the Bank Nifty. But what seems to be outperforming today is the mid caps. So any select stock picks that you have from the broader markets as well as from the Nifty space?
Oh, absolutely, Ekta. Clearly, there's a bit of an outperformance from the broader market. We've seen that last week as well, so it's going forward this week as well. So REC is something which is looking very attractive. The entire basket of energy and power is buzzing from last week onwards. So REC is something which has managed to break out of a narrow consolidation phase. At current levels, one can still look to go long, look for a target of 135 on the upside with a decent stop loss at 117 on the downside. The second stock is Indian Hotels. Now, this has been one stock which has clearly bucked the trend despite the fact that markets have been choppy and volatile. This has just went into a sideways consolidation. And today we've seen a good up move on good volumes. So Indian Hotel will be on the buying list for a target of 340 on the upside with a stop loss at 312 on the downside.
Okay, that's on Indian Hotels. Thanks a lot for that. In fact, the market might be lackluster, but there are plenty of stocks which are hitting fresh 52-week highs as well, so don't lose sight of that. Something like a Gujarat Pipavav is at a fresh 52-week high. Blue Star is at a fresh 52-week high. In fact, that stock has had a very strong run in anticipation of a heat wave coming through. Business will move up for a lot of consumer durable makers like Blue Star, something like a KEI Industries, Bosch, all looking pretty good this afternoon. Thanks, Aditya, for joining in and giving us those stock ideas. We'll take a quick break. We'll come back with more on the markets and stock-specific action on the other side. Stay with us.
Welcome back. Well, steady as she goes for the markets. So 17,664 is currently where the Nifty is at. Just want to point out one particular stock, which is Natco Pharma. It's not moved a lot. It's up around 0.5%. But nonetheless, the news is that the company has approved a buyback worth around 210 odd crores. And it is going to be an open market buyback. Remember, the stock has corrected significantly, over 130 odd % from its 52-week high. So that is something to put into context. So Natco Pharma is in focus on account of that. And the other stock which would be in focus would be Ajanta Pharma from the pharmaceutical space, which will be considering a buyback in 2 days from now on the 10th of March, which is on Friday. So Ajanta Pharma will be in focus on account of that particular piece of news as well. But let's move on then and talk about other specific stocks. Bajaj Auto, which is one of the biggest Nifty gainers today. This is after brokerages such as JP Morgan and Motilal Oswal are talking about their aggressive scale-up of the EV business, the electric vehicle business. Sonia, tell us more.
So, that's the theme that going forward, they are scaling up big time in their electric vehicle business, both in 2- and 3-wheelers, and that's why brokerages are quite positive. JP Morgan has a target price of 4,400, which is a big upside to the current market price. And they say the stock could re-rate this year because of the aggression that they are showing in the electric vehicle ramp up. Now, currently in the 2-wheeler space, they have the Chetak, but they are scaling up the Chetak EV volumes to 10,000 monthly run rate versus the current 3,000 to 4,000. So they're scaling up on the Chetak electric vehicle. They also have their EV 3-wheeler that will launch in April of this year, and hence that would be the next big growth trigger. They speak about how exports are likely to bottom out. The management commentary indicates that, and how they expect recovery to come in from Q2 FY24, and they expect recovery in the domestic 2-wheeler space as well. But the big, positive for Bajaj Auto is on the stock price. So JP Morgan says that the risk reward is now favorable. The valuations are undemanding at about 13.5 times forward. And Motilal Oswal also met the management, and they too are quite confident about a good pickup expected in the electric vehicle business. They say that exports will remain stable over the next few months, and the entry in Brazil of Bajaj Auto as well as the upcoming Triumph launch are the next growth drivers. The Brazil motorcycle market is 1/3 of the Indian motorcycle market in terms of revenues, and they have an aspiration to achieve 17 to 18% market share in the Brazilian market. So these are a couple of triggers because of which the stock is doing quite well. It's up almost 1.5%.
All right, so that's about Bajaj Auto, up about 1.5%. Just keep an eye out on IndusInd Bank, a near 4% move on that stock, the top Nifty gainer, and the stock has been rising ever since, CNBC-TV18 broke that story where RBI is likely to extend the CEO Sumant Katpalia's term by about 3 years, and as a result of which, analysts say that this reappointment is a near-term catalyst for stock re-rating. So ever since the news hit the screens, we've seen only a one-way up move on that counter, currently at the high point of trade, also responsible for a lot of the outperformance that the Nifty bank is showing, and more so the Nifty private bank index, which is currently doing extremely well. But what's also doing well are a bunch of sugar stocks. Media reports suggest that there will be an additional 1 million tons of sugar export if output meets estimates. Surbhi joins in with all the details. Surbhi.
Hi, thanks for that. So sugar companies are in focus today. All the stocks have rallied anywhere between 3 to 5% in today's trade, and that is because Business Standard reports suggest that there's a possibility of an additional 1 million ton of sugar exports. Now, this will be possible only if the domestic output meets the government expectations of 33.6 million tons of sugar production. As of this month, the sugar production has reached 24.7 million tons. The mills have already dispatched 4.3 million tons of sugar exports, of which out of the 6 million tons that were allotted to them. Now, the crushing operations will end by the end of this month, and the government will take a call on additional sugar exports by next month. However, our sources have suggested that this additional sugar exports is highly unlikely.
Okay, all right. Thanks very much for that, Surbhi. But nonetheless, all the sugar stocks buzzing around in today's trading session. Time for a short break. But once we come back, we'll get you excerpts from our exclusive chat with ACMA's Sanjay Kapoor. Stay tuned.
Welcome back. There's a big move in the sugar stocks. Just look at that. Dhampur sugar is up almost about 14% right now. And a couple of these other sugar names are also seeing a big move at the moment, not just in terms of price action, but volume action as well. And, as we were telling you, there is, of course, a news report suggesting that there could be an additional 1 million ton sugar export announced by the government. But our colleague Abhimanyu on Friday had said that, this proposal will not be taken up. So just want to put that on board. So don't get carried away with the moves that you're seeing in the sugar space at the moment. But let's move on to another space, auto ancillaries. Our colleague Danish caught up with the ACMA president Sanjay Kapoor and started off by asking him how demand is panning out in the automotive parts industry. Here's what he had to say.
Last financial year, we had a trade surplus, which was the first in our history. In the first 9 months, we've already seen an export of 15.1 billion. So, we're definitely on track. We've seen a strong growth in the domestic market, as well as strong growth in exports, fueled by a lot of investment in technology and a lot of confidence in the Indian manufacturing capabilities, especially in the component sector.
So do you think this demand is here to stay as far as imports are concerned or exports are concerned and our domestic manufacturing concerned? Will this sustain for a long time? Are there any segments that you're seeing that have started to show a sign of weakness?
So, I feel that the demand is here to stay given what's happening and given the trend that we're seeing. We definitely hope that imports will reduce because there's a lot of localization programs. We're spending a lot of time, money, effort in localizing, and this has been going on for a while, and we hope that this localization effort continues and bears fruit, and therefore we hope imports decrease, and we hope at the same time exports increase. And we're seeing a lot of push from the China Plus One, from the opportunities from international purchase offices that actually want to source components from India. Our real aim is to build a manufacturing hub for the world, and that's really the direction which we're headed.
So the Indian EV market is very robust, and we're seeing that many new players, even the legacy players, have now stepped in. But as far as the component angle is concerned, how ready are we? And in the years to come and the times to come, how can we take an edge over of manufacturing of components for EVs, and so that we can have a robust export in the future?
So the short answer is we're ready. And when we did a survey within ACMA last year, I want to say 2 years ago, 60% of our membership was ready to go. The remainder would be ready in a year. So I'd say we're absolutely ready to address the EV market from a component perspective. And I feel that the thing that will really help us will be investments in technology. Private sector's role is to invest in technology, and we're going to continuously invest in tech so that we can leverage the opportunity that presents itself today. So whilst some may look at it as a challenge, for us in the component industry, it's really the opportunities that have been presented with the shift or with the disruption in our industry.
So how is the capacity utilization looking like in the industry right now? Do you assess that it will reach at least 100% in certain segments?
So, we're almost at about 70-80% capacity utilization from an overall perspective in the component industry. And if, this continues, if this growth continues, the growth that we're seeing will definitely reach capacity, and we will definitely, in fact, the capex cycle is back. People are reinvesting in terms of capacity as well as in newer technology. So it's all looking very positive.
So very lastly, the auto industry is pretty much split when it comes to FTAs. So what is your take on this?
So I think FTAs are a good thing. Being competitive is absolutely imperative if we want to play in the world market. So I think, we encourage FTAs. We're for them. We want to be able to be globally competitive. And to be globally competitive, we need to, stand up to competition from around the world.
All right, time for a break right now. On the other side, we speak about coffee. Our commodity editor Manisha Gupta joins in with Anuj Agarwal, who is the head of Coffee India, Louis Dreyfus Company. Stay tuned.
Welcome back, and joining us on the show now is Anuj Agarwal. He's head of Coffee India, Louis Dreyfus Company, and he joins us now on the show. Anuj, hi, thank you so much for joining us. And the last couple of years actually have been very volatile for coffee prices. If I look at the latest reports, they suggest that this is going to be a third straight year when supply is going to be trailing demand. What numbers are you working with?
I think coffee market has never lost an opportunity to surprise the market participants, and this year yet again has been one of the interesting ones. We have seen prices rallying a lot in a very short period of time. Prices are up by almost 25% compared to the start of January now within 2 months. So yeah, and there are various reasons to that. We still are assessing, or the market is still assessing how bad the supply is, or if there is a drop in the production, or is it more to do with the demand side. But again, the facts are saying the prices have rallied a lot in a very short period. There have been reports, or the market is talking about that the production can be lower by, let's say, 10 to 20% compared to the previous year. But I think everybody is still on the way of assessing their numbers, and there is no public number which is shared till now on the loss in production compared to previous year.
Oh, well, absolutely, Anuj. Markets are awaiting those final numbers. But the retail prices in sense of coffee has just about continued to gain up. It doesn't really follow the wholesale markets. How do you look at that? And what's your sense on the downstream company, the consumer companies in sense of the prices?
For the consumer companies, obviously they have limitations that they cannot keep changing the prices every now and then. There is a volatility in the commodities, so which is what we are seeing in coffee as well. So far, we have not seen any sharp increases on the retail prices as such till now. But if this situation continues, or if, let's say, the coffee as a green coffee commodity prices keeps on remaining strong, I think people will start, or the roasters who are in the consumer brands, I think they will start taking some action. But so far, we have seen that on the retail market, the price have been pretty stable. The main action is on the price volatility is majorly on the green coffee as a commodity.
Point taken. How do you look at the Indian markets as well, and how would you look at the availability of coffee and demand in front of that?
I think one major factor we need to consider here is that a lot of business gets booked on forward for the export market. So India is still a net exporting country. 70% of the production of India goes on the export market. And a lot of this business happens pre-season on forwards. So if people who have taken contracts, who have sold forwards, now irrespective of the prices, they have to cover it and they have to ship out the coffee. At the same time, there is a domestic demand, and kind of people have to buy the coffee irrespective of the prices. So somewhere that is also adding to the volatility in terms of if the availability is tight. This year particularly, we are seeing the flow of coffee or the arrivals of the coffee in the market is lesser compared to what we have seen in the previous years. Again, can't really comment on the exact numbers today, but we are seeing, we are in February, which is the peak time of the year, and we are now entered into March, and still we are not seeing the kind of flows which we see in a usual year.
Okay. You already mentioned that we've seen prices gain up by 25% in this year up till now. What is your sense now for the next month, next quarter in sense of prices?
I think really difficult to comment on the price movement going forward, but just to state the facts, what we are seeing at least in the past 1 week or 10 days is somewhere the prices have become a bit stable. Today, the prices of the coffee in India are almost the record high. It's the highest ever prices for the Robusta cherry, which is the major production out of India. And today, the Indian coffee prices for Robusta coffees are the highest ever on the export market. Highest ever when I say is in terms of the overall flat price, and when we compare India to various other coffee producing countries like Vietnam, Brazil, Uganda, etc. So I think at these kind of prices, somewhere we are finding a bit of less interest, which is coming on the export market lately, and that perhaps may work on impacting the prices going forward. But so far in the last few days, we are seeing prices a bit stable. I mean, the major correction or the major increase in the prices already happened somewhere, and now we are seeing a bit of stability in the prices as such.
When you talk about higher prices, is demand destruction also a result of that? Are you working with any numbers wherein that?
In general, for the global, I mean, somewhere there is a tendency that not a lot of demand destruction happens, because if people are drinking coffee, they continue to drink coffee in Europe and US and other major coffee consuming countries. So on an overall global level, we are not seeing a big demand destruction as such. But particularly for Indian coffee, it will be interesting to see with these kind of prices whether roasters will, let's say, start switching out of Indian coffee and buy something else, or they continue to still buy the Indian coffee. I mean, that's a question which everybody is trying to answer today, and that is the major component of what will derive the price. But I mean, it will be interesting to see how the roasters will outside India will behave going forward.
There's another industry that has stood up now, Anuj, and that is about premium coffees, expensive coffees, health benefit, those coming in with coffees as well. How do you see the overall industry panning out with these new fads or trends?
I think industry is quite advancing in India. We are yet to see a big volume growth, particularly in terms of green coffee consumption numbers. But we can clearly see a lot of trend changes. There are a lot of new cafe chains which are coming up. There are startups which are coming up in the Indian sector. India is such a vast market, and the consumption out of India, the base is still very small. So even few percentage changes can bring in big impact. So I think it's a very positive sign going forward in next 5 to 10 years. I think it will be quite positive the way the industry will advance in India, and it will be interesting to see how the markets rides with that.
Okay, all right, Manisha, thanks very much for bringing us that outlook. Well, on that note, we need to wrap up on the show with the headline that the Nifty is currently up around 0.5%. We have the mid-caps, which are now gaining around 1%. It's a wrap on Halftime Report. Business Lunch up next.